You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever scintillating, ever compelling, at least we tend to think so around these parts, Options Insider Radio Network. If I sound a little under the weather, it's because I am, but I'm fighting through it, listeners. 5 shows yesterday, a bunch more today. Not helping the old voice, but you know what? We're going to power through. Nonetheless, out there, listeners, you folks, you come demanding content, and we're going to give it to you out there. Of course, you know, if you like what you hear, if you appreciate our Herculean efforts to deliver content on your behalf, then you know what to do. Head on out to your platform of choice, wherever you get this fine program. Leave us a few stars over there. It does help all you new folks continue to discover the contents. I mean, it's just been crazy town these last couple of years, last year in particular, December in particular, every month crazier than the last. So we love you all. This January, 16 years. We can drive now. We're legal. We have a license. So crazy town. We'll have to plan some sort of fun soiree to celebrate all of that appropriately out there. And then, of course, if you want even more in your lives, and who can blame you? We just had, speaking of Vol, we just had Scott Nations on the Pro Q&A just yesterday. Awesome, great chat about all kinds of fun stuff. Turns out the man really hates gold. Who knew it? Hates it. Great talk about Vol and a whole bunch of other stuff. Where can you check out that and 200 pretty much hours of other great pro content? theoptionsinsider.com/pro is the place to go. I do believe we're going to check in on one of the trades we talked about on the Pro Q&A session a little bit later today as well, because who's joining me on the old Vol Views program today? First, let's go out to the Southern Volatility Mecca, soon to be the home of the SEBO Risk Management Conference later on this year. It is Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, how go things in the land of the pit, sir?
Things are great. It's good to be here. Excited. We got my my good friend coming on here in a second. It's going to be a wonderful day for volatility and viewing it.
That's not what he said about you a few minutes ago. Oh, wait, I'm sorry. I shouldn't have said that. Because we are now joined on the program once again. You can't get enough vol, listeners. He is the once future and now present Dr. VIX. He's got the paper. It's on his wall, so it's official. Also hanging his hat when he's not talking to us over there at the KELLEY School of Business. Also the author of one or two or half a dozen vol-related tomes. He is Mr. Russell Rhoads, Mr. Once and Future Dr. VIX. Welcome back to the program as well, sir.
Absolutely thrilled to be here. I got my blue taffeta dress on for the Sweet 16.
Oh, you're rearing to go. You're all ready.
I am.
All right.
If one of our tweets gets 1,000 likes, I'll post a picture of it.
Uh-oh.
Oh, nice.
Scary. I'm not sure, listeners. Do you really want to go down that rabbit? Maybe that's a disincentive to like the tweet. We shall see as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is lighting things up from a vol trading and trending and analysis and unusual activity perspective. Of course, getting back to social media. We just had Mr. Jim Carroll on the show last week. That man likes a good vol gif or two out there. So we've already had quite a few social media memes and gifs flying fast and furious at the show over the past week. Can we handle any more? I guess we'll find out. Let's see what the market can handle out there today, listeners. And you know what? Bit of a green day. You know, people were waiting for this maybe yesterday. Yesterday, markets turned to the red. Today, though, getting back up north, S&P rallying about 30 handles, about 0.75%, hanging out right north of that 3,900 level that it had danced below yesterday. Right, closing in on 3,930 out there. The Dow up about 0.15%. So the Dow playing the laggard role today. NASDAQ looking a little more effervescent out there, 1.35% to the upside. That means most of our vol friends are up from last week, but not quite as high as they were, let's say, just yesterday when VIX was hanging out in a 20 handle, 21. Not so much today, back in the teens, listeners, 19.5. That still puts it up 1.4 freaking points. We were threatening to break the 18 handle the last time we were chatting here on Vol Views, listeners. So vol got kind of low, getting a little bit frothy today, even though not quite as high as it was yesterday. I think the high yesterday was around 21.69, somewhere along those lines. So obviously we have retreated off those highs, but maybe a little bit of a happy face for you folks out there who've been waiting for a little bit of VIX juice to come cranking back in. Again, we've debated for quite a while now. Was VIX broken last year? A lot of our guests have weighed in. Scott just weighed in on that on the Pro Q&A. Jim Carroll on the show last week. It's been a frequent talking point. So there you go. All you folks out there who were saying VIX is broken, VIX is broken. You got a little bit of pop back over the course of the last few sessions. It's gone now. It's short-lived. We've said that a million times. It doesn't last very long, but you got a taste of it. So you can't say you weren't invited to the party out there. Whether you danced or not, that was up to you. VVIX 81 up 2 points from our last show and up about 8 points from that kind of disturbing low of around 73, 72 and change that it hit not too long ago out there. VVIX was getting perilously low. As you recall on the show, listeners, I said it probably won't hang out there for too long. And at least for now, that is the case. Back up to an 81. Let's go around the horn. Let's start with our guest, Mr. Rhoads. Mr. Rhoads, sir, a lot to unpack. I know you got to trade. We'll get to all that fun trade in a second. But first, what is catching your eye out there in the vol markets this week, sir?
What I'm really focusing in on is this relationship between vol Q and VIX. And the reason I'm focusing in on it is we're going to get all the big NASDAQ components behind us in the next couple of weeks earnings-wise, and that always provides a little bit of a bump for vol Q. But we've got a very long time with vol Q at a premium versus VIX, and I think that's like a macro endorsement of a recession coming. Because the NASDAQ or technology stocks would be expected to underperform or be more volatile as well during an economic downturn. But that spread is narrowing And I really think earnings is the only thing that's holding it up right now. And just seeing NASDAQ outperform the S&P so far this year is a bit encouraging with respect to the overall economy. I'd love to see some volatility index confirmation of that as well.
Yeah, like you said, we had the creator of VolQ on our Pro Q&A yesterday. He had some interesting discussions about the points he found interesting diversions between VolQ and VIX. He had some nice things to say about you as well, Mr. Dr. Bitch. I was surprised at. Clearly Scott's a fan of yours out there. No nice words for the meatball, but who can blame him out there? But it was interesting nonetheless. So we'll get more, obviously, in the coming weeks and months, listeners, into all things VolQ, how it diverges, and perhaps gets close to all things VIX out there. Let's go out now to the sleepy Southern volatility mecca. Mr. Meatball, sir, vol was coming, now it's going again. Vol was low, now it's a little higher again. What's catching your eye out there in the vol markets these days, sir?
Yeah, Russell, I actually look at usually VXN versus VolQ instead of VIX because that gives me a real clear view of what skew actually looks like in the NASDAQ. And I got to tell you, after really bottoming out on December 29th, when VolQ was trading at just a 45-cent discount to VXN, the skew has gotten a bit of a bid, touched 2 yesterday, and is now trading at about VXN's trading about a 1.5 point premium to VolQ, which is about normal. So you do see that now VolQ versus VIX. You're right. That does give us, I think, a really good insight into kind of what kind of vol is being pumped into these names, and that is that negative number is negative 3.2. So you've got a pretty good negative number there for that. So you're right. We're seeing some earnings vol start to kick in here.
It is that time of year, listeners. Probably get into a little bit more earnings vol a little bit later on in the show. Before we keep rolling, Mr. Rhodes, I know when you did your Pro Q&A a couple of weeks ago as well, you had a fun question from one of our pro members about how you would plan for or prepare for a pop in VIX over the next 6 months. And obviously that's an intriguing question, a lot of different ways you could approach that. And you've really been running with it. You've made multiple blog posts and everything else about that. So catch our listeners up really quickly. What was your methodology? How did you decide to play this potential 6-month pop in VIX, and how's it going so far?
How's it going? I'm sorry you asked that one. I'll just back up. Got asked in early December if I thought, and I don't agree with the forecast here, but if I thought we were going to get a spike in VIX back up to the 30s, how would I go about playing it? And I've always, if you think it's going to happen over a period of time, not next week, I can totally tell you what to do if you think it's going to happen next week. But if you think it's going to happen over a period of time and you don't know when, you want to, for a VIX spike, you want to have exposure to the front month. So I looked into selling a put and putting on a put spread and then using the proceeds to buy an out of the money call and trying to do it very close to even and rolling it the Friday before the next expiration. So I put one on with December options. I rolled to January, and January, the future was at such a premium relative to the spot index that I wasn't real happy with how far out of the money the call was that I would have to purchase. So I actually combined a short call with the January spread. That one didn't work particularly well, lost a couple of points on it. But I'm sticking with, the 6-month plan here that I was asked about and sticking with that forecast. So I did roll it to February. Right now, the February spread is with a lot of time left to expiration. Even it's looking like it's pretty close to break even right now. But I'll continue to do that through June. The exit idea is if spot VIX runs up into the low 30s, which was kind of the high last year. I know it got a little bit higher than that, but if we get a day where it goes up in the low 30s, I'll just take the whole thing off and we'll see how the profits looked. And I'm gonna, if you're okay with it, and your producer's okay with it, I'll be shameless and I'll tweet out the link and tag you guys on it. For the last piece that I wrote on it. And somebody had some really good questions that I addressed as well at the end of the most recent rolling transaction.
Yeah, people have all kinds of thoughts when it gets to the rolling. So yes, they will chime in.
Yeah. You know what? There's no absolute right way to do it. You know, and God knows the Monday morning quarterback packing is really good. Is always perfect. But I have a way that I prefer to do it. And I've actually back tested it, and it tends to not lose very much and then make really nice profits periodically when we do get one of those volatility spikes.
Mr. Meatball, I'm curious for you if someone approached you with that same question, and regardless of whether or not you agree with the hypothesis that, VIX is going to spike over the next 6 months. If someone came to the land of the pit and asked you, how would you prepare for a VIX spike over the next 6 months? Would you go about it a similar way? Mr. Rhoads, would you do something else? What's your preferred MO?
I mean, a week and a half ago, VVIX was down at about 73. That was an opportunity to buy VIX vol at multi-year lows. It's since rallied. Yesterday, it got up to 85 so it's rallied 12 points. So the vol has kind of returned to normal. If I was going to build a VIX hedge now, what you really want to play is, again, that vol going up and VVIX going to 100. I don't think VIX can get to 30. I'm in agreement with Russell, but I would try and build like a back spread for even money. So I would sell like a March near the money call and buy 2 out of the money calls and play a spike that way rather as a way of trying to get in inexpensively. I would want to build a back spread. Up at 82, don't love that approach as much. I think I like Russell's idea better. But last week, I would have been looking at when vol got really low, I've been looking at a back spread.
Yeah, that was an interesting opportunity. We mentioned it on the show, listeners. Pay attention to that. That was pretty anemic from a vol perspective. How would you go about it, listeners? I'm curious. Hit us up. Let us know as we keep on rolling out there to the land of the vol futures. Obviously, Jan rolling off the board now. So Feb moving up into the big boy front month spot. And March coming in behind it. Both of them up on the week, but not a ton. Both of them up about the same amount, which is interesting, about 1/3 of a point out there. Other than that, not a heck of a lot lighting up the vol surface this week. Mr. Rhoads, anything catching your eye out there in the land of VIX futures this week?
Whoop, I had muted myself. No, nothing. Other than it's kind of nice to see some normalcy. As far as the term structure goes, it's kind of just gotten back to something that I take a picture of and describe as kind of a normal curve. There is a bump a little bit farther out, and I don't know really what that might be attributed to. Maybe just not a lot of people paying attention to the July futures right now, or it's not the most liquid contract in the world. That's the only thing that even looks like a moderate outlier. But everything just looks like, hunky-dory, normal, boring market. With the exception of everything being with the exception of the front month being in the 20s, but 20s is kind of mid range now.
July, that hot time for vol, right?
You would think there's probably an opportunity to sell July and buy August right now.
That type of spread has occurred to me looking at that July little spike, which has been there for a couple of weeks. And you're right, is a wee bit perplexing. Mr. Meatball, any thoughts for you as you're looking out there at the otherwise somewhat normal VIX curve this week, sir?
Yeah, same thing. We had Jan expiration settled around 19. VIX itself, that curve does look pretty normal. Not a lot of kinks, like Russell said, in VIX itself. the spread between the Fed future and the front month is pretty normal, maybe a little bit tight with how much time till Fed expiration. The spread right now is about 1.35. That's a little bit, I think that's a little bit tight. I think VIX needs to fall a little bit below that, especially coming into a weekend. I'm a little surprised, but that would be kind of the only thing that I see as a potential, down, kind of interesting piece.
Let's see if we see any interesting pieces in the land of the vol options. Let's go out to Big VIX. Right now, looking kind of light, 186,000 contracts on the tape, so not a heck of a lot going on as we head into the weekend. The ADV also trending in the wrong direction after getting some lift over the last couple of weeks. It's back down to 555,000. It's down about 19,000 from this time last week. Looking at the top 10 positions out here, it is still 9-1 calls over puts out there. And the first put, pretty easy to find. It's right there at the bottom of the list. Number 10. Cost you 109,000 contracts to break into the top 10 this week. That is not a heck of a lot in VIX land, but we've obviously seen some paper roll off the board. The total OI is a little bit shy of 8 million, which is also pretty light out there in VIX land, hence only costing you 109,000 contracts to break into the top 10. That gets us all the way to the Feb 21 puts. And if you want more puts in your top 10 listeners, you're listening to the wrong show because there are none. Number 9, $1.29 of the March 30s, and then we're off to the races from here, listeners. Number 8, $1.30 of the Feb 60s. Number 7, $1.59 of the Feb 25s. I think that's going to do it for reasonable quote-unquote strikes. Number 6, 168,000 of the March 40s. Here we go, back up there again. Number 5, $1.70 of the Feb 70s. All right, that's more like it. Number 4, $1.72 of the March 80s. Even better. Number 3, 183,000 of the Feb 80s. Also good. Number 2, 200,000 of the March 30s. Look at those sneaking in there, those sneaky March 30s. Deceptively reasonable when they're bookended by the Feb 80s and then the number 1 spot, the March 75s. The Feb 30s, again, look comparatively reasonable. The big dog out there, such as it is, 212,000 right now of the March 75s, listeners. So we're still hanging out in that, shall we say, interesting territory where it's pretty much all upside all the time. And when you're talking about things that are interesting, they don't get much better than the intro for this next segment. So let's get to it.
Now, Russell's Weekly Rundown.
Oh, I do love that. I do miss that when that was a regular fixture here on the show, but we try to work it in whenever possible. Mr. RHOADS, I know since the last time you and I chatted, you have been diligently tracking all things weekly options in VIXer. What is catching your eye out there this week?
Absolutely. And the only reason I continue to come back on the show is just to hear that. I just want you to know that.
And to drive up my licensing fees for playing it.
Oh, yeah. I'm sure it's that 30. I'll cover the 37 cents next time. Tuesday. Well, nothing happened on Monday. Tuesday, we came across somebody sold 50 of the February 8th 31 calls for 23 cents and bought 50 of the February 8th 50 calls for 8 cents. Took in a 15-cent credit. And if we get some sort of vol spike, they could lose as much as $18.85. So I don't know about the dollar risk reward on that one. I understand the logic on it, but it's kind of scary. I've been criticized sometimes for talking about trades that have really small credits and have a very low odds of going against you. So I'm going to start emphasizing the downside a little bit more. Also on Tuesday, somebody bought some the February 8th 21 calls, sold the February 8th 22 calls. They only paid 25 cents for that spread. So VIX back up above 22 in 3 weeks. That puts that at a profit of 75 cents. On Wednesday, there's actually a pretty sizable trader using the trading a call spread using the February 1st options. The one lot that I'll talk about, and I saw other large lots that were similar prices. Came across somebody bought 600 of the February 1st 20 calls for $1.64, and they sold 600 of the 24 calls for 50 cents. That cost them $1.14, and nice profit of $2.86 if we get above 24 by February 1st. A little bit less of a time frame there. I saw another 400 lot. I think there were a couple of other lots. So somebody was putting this on in okay size. Also, somebody, and I like this nice round number, somebody bought 386 of the February 8th 22 calls for $1.19, just an outright purchase. And then on Thursday, I had a buyer of 800 of the February 8th 22 calls for $1.65, basically, maybe following on with that Wednesday purchase at a little bit higher price. Somebody sold 428 of the VIX February 1st 21 calls for $1.86 and bought the same number of the 23 calls for $1.06. Took in a credit of 80 cents, have a risk of $1.20. Kind of like that trade. Just as VIX seems to be bumping its head against 20 and not able to stay much above 20 for much time these days. So maybe kind of a smart trade with the trend in VIX. And then finally today, somebody bought 1,000 of the VIX January 25th 19 puts for 13 cents. And that's definitely an opening trade. I've seen a couple more thousand trade today, and I say it's definitely an opening trade because the open interest was in the hundreds. And then somebody bought 1,500 of the VIX January 25th, 27 calls for a nickel. And then I saw another buyer of those for a nickel. So somebody's buying a lottery ticket there. Much like, betting on the Jacksonville Jaguars not to come back and win a game.
We should put that out to our audience. What would you rather have in your back pocket for next Friday, the 25 calls or the 19 puts? I got a feeling they're going to want the 19 puts, but hey, you never know. I don't hate those 19 puts. That's interesting. Mm-hmm. The 27 calls, you're right. Maybe a little bit more of a lottery ticket out there, but intriguing stuff nonetheless. Thank you, sir, for yet another weekly rundown, doing yeoman's work out there. Let's see if we can match your effort there with what little there is going up in the big options, at least today. Today, like we said, only 186,000 contracts on the tape. The big dogs, such as it is, 23,000 of the AUG 70s. So even though not much is going up, they still haven't forgotten their ridiculous upside. It is still going up, followed by 10,000 of the April 19 puts and 10,000 as well of the May 19 puts. So maybe a straight up time spread or a bit of a roll. Kind of early to roll April, but we've seen weirder things. And then number 4, we got 7,800 of the Feb 34s, and rounding out the top 5 on a pretty anemic day, 7,000 of the March 20 puts. Yesterday, a little bit more respectable, 507,000 contracts on the tape. Still not breaking the ADV, hence why that number is going down this week. The big dog yesterday, 40,000 of the July 60s. So once again, crazy upside leading the dance. Number 2, 24,000 of the Feb 30s. Number 3, 23,000 of the Feb 20 puts. Number 4, 20,000 exactly of the June 35 calls. And rounding out the top 5 yesterday, 15,000 of the June 25. So maybe a bit of some vertical action, June 25, 35 out there. Right behind it, we also have 15,000 of the March 90s for number 6, if you are curious, listeners. So they did get pretty out there yesterday. Wednesday, 645,000 contracts on the tape. A little bit more respectable paper. The big dog, 67,000 of the Feb 30s, followed by 42,000 for number 2 of the Feb 25s. Number 3, 35,000 of the Feb 35s. Number 4, 25,000 of the Feb 80s. A day can't go by without some of these outlandish strikes sneaking in there. Number 5, 25,000 as well of the April 24 calls. Tuesday, the busiest day of the week. Doesn't seem like today's really going to catch it. We got 793,000 contracts on the tape. They were making up for lost time on Monday. The big dog on Tuesday, 59,000 of the Jan 20 puts. Interesting. Those are going the way of the dodo pretty much already, so I don't think they worked out. I'll have to go check and see. That midweek vol spike probably coming back to bite them here. Number 2, 44,000 of the Jan 19 puts. Number 3, 33,000 of the Feb 30s. Number 4, 34,000 of the Feb 21s. And rounding out the top 5 on Tuesday, about 29,000 of the Jan 24 puts. Intriguing stuff. Mr. Meatball, obviously a truncated holiday week. Obviously kind of light volume to end the week here, but outside of Russell's flurry of weekly options, anything catching your eye out there in VIX this week, sir?
It's like you said, pretty anemic this week. I did not see any orders that really punched me in the face. Looking at today, biggest order is the AUG 70 calls. We do have some put buyers today. Looks like they're trading a calendar spread with May versus April. So the 8 May 19 put spread has gone up for 10 and 9 cents respectively. And, that's about it. Not a lot. Yesterday, not exactly exciting either. You had some July 60 calls go up. We had a seller of the Feb 20 puts, which was interesting. Looks like they did the, nothing really punching me there. And nothing on Friday, nothing on Wednesday, really, despite the kind of crazy turnaround. And Tuesday, same story, just a whole lot of nothing. VIX expiration really didn't even see a lot of gambling one way or the other on where it might go.
Yeah, kind of a week, even though we did see some move out there in vol products at the end of the day. Didn't really translate into a ton of volume, which is interesting in and of itself. What was moving last week in particular, Mr. Rhodes? It's your favorite. It's good old SVIX, a.k.a. The inverse vol product of choice, because it's kind of the only one right now. At a 1685 right now, down about a third of a point from where it was this time last week. Of course, last week it got up to its high for the year, somewhere around 17 and a quarter, 17 and a half, somewhere in that range. So 52-week high touched for SVIX, which you would expect when we dip down into an 18 handle pretty quickly in VIX. So, Mr. Rhodes, your favorite product out there, hitting a 52-week high last week. Well, what are your thoughts out there on SVIX finally doing something, sir?
It's doing great. I'm thrilled to see. I was thrilled when they launched it. I'm thrilled to see what it's doing. I'm a little bummed that I'd say about a third of my position is going to get called away because of my short 16 calls today, but is what it is.
I was just going to ask you where you're writing those calls. I was curious. Okay.
I'm a good portion of that open interest on the 16 calls.
There you go.
I kind of went all in on SVIX about 3.5-4 months ago. So, but getting ready to lose some of it.
You want to join the party? You too can be part of the open interest out there in SVIX, because there isn't a ton of it, listeners. Today we got a whopping 564 contracts hitting the tape. The ADV is a little bit shy of 1,950, down about 50 contracts. So can't even maintain that 1,000 out there. In terms of size positions, let's do a quick top 5 out here. Number 5, we got the Jan 4 puts, a whopping 700 of those. Number 4, 1,000 of the March 25s. Those are interesting. 25 handle. That'd be, what do you have to get in VIX to get to a 25 handle in SVIX? I shudder to think. Number 3, 1,200 of the Jan 6 puts. Also interesting. Number 2, 1,300 of the Jan 16 calls. Mr. Once and Future Dr. VIX's favorite strike, and the number 1 size position out there in SVIX. 2,100 of the Jan 14 calls. Mr. Meatball, have you been drawn more into SVIX as it's making new highs for the year, sir?
Yeah, I've been long it for down in the. I think I bought for a little less than 13. I sold some this week because I think we're due for some sort of little pullback, and then I'm going to reload. Anytime this thing gets down into the low teens or into the tweens, I'm buying with both hands.
There you go. Liking himself some SVIX as well. So the two people who like SVIX here on the show with me today, listeners. You liking it, listeners? You like buying it? You like maybe doing the use case Russell's talking about, buying it and then overwriting the heck out of the calls out there? If you did, you had some action over the course of the past week. Intriguing stuff. Speaking of action, this thing's been popping all over the place. Right now, it's kind of almost unched, which is interesting. It's UVIX trading 4.25 right now, up about 1/10 of a point on the week. Today, let's see. It was putting up some numbers earlier today on the options front. Let's see if that's holding up. It was about 1,700 contracts when we kicked off the show. It's up to about 2,500 today. So decent, but not really blowing the doors off. The ADV is moving in the wrong direction. It's down to about 4,700 contracts. That's down about 400 from what we were talking about last week. In terms of the size positions, let's just do a quick top 5 out here in UVIX. Number 5, 1,100 of the Feb 12s. Number 4, 1,100 as well of the March 8s. Remember, I said we're hanging out at a 4.25 right now, listeners. Number 3, 1,500 of the Feb 13s. Number 2, 2,300 of the Jan 6s. Those are going out today. And then number 1 out there, 2,400 of the March 25. Someone likes the 25 strike in both SVIX and UVIX. What does it take to get UVIX to a 25? Also, an intriguing question out there. Mr. Meatball, you were talking about reverse splits out there last week. Anything else catching your eye out there in the land of UVIX as it proceeds its march back towards zero, sir?
Yeah, it's got the big reverse split coming. I think the timing could not be better for that. I think it's going to be a fun one to trade.
Remind us of the date of that again, sir.
January 25th. So early next week.
There you go, listeners. By this time next week on the show, we will have a freshly reverse split UVIX. That'll be fun to be talking about an actually meatier handle out there than what we got right now. Speaking of meaty handles, UVXY a little bit meatier than good old UVIX. 5.5 is where UVXY is hanging out right now, up about 0.15 or so. Not a huge move there as well. The ADV about 198,000, so still hanging out around the 200K level, up 3,000 from last show. It'll be interesting to see once UVIX reverse splits if it kind of steals a march on the UVXY from a volume perspective. Obviously, UVXY is still doing orders of magnitude more paper right now, but that could change if UVIX splits first and hangs out there longer while UVXY kind of meanders around this 5 handle for maybe another month or two. That could certainly eat into the paper. Let's do some top positions out here really quickly. Number 5, 19,000 of the Feb 7s. Remember, I said we're at about a 5.5 right now. Number 4, about 20,000 of the Jan 5 puts. Those are going out today. Everything's going out today except for the Febs. Number 3, 21,000 of the Jan 75s. That's the good stuff we come to know and love. UVXY, Jan 75s. I need to go dig and see when those are opened. I'm guessing quite a while ago, listeners. Number 2, 25,000 of the Jan 6s. And the number 1 size position in UVXY, about 30,000 of the Jan 10 calls. Mr. Once and Future Dr. VIX, anything catching your eye out there in the land of the soon-to-reverse split UVIX or the still languishing UVXY, sir?
No, I pay more attention to the short ones. I've rarely, if ever, traded in the long or in the leverage long ones. I used to do stuff in VVIX before they had their issues. I wonder, the last split that UVXY did was a 10-for-1. And part of me wonders if that's, they're waiting for it to get just a little bit lower before they announce that, because they don't want the price too high. They want to be able to show that they're doing great volume. And volume does get hurt when your notional value is much higher or the absolute stock price is much higher. So part of me thinks that's why, we all sit here and wait when they dip below 10. And now that we're messing around 5, my feeling is we're probably going to see a 10-to-1 split out of them.
That would certainly be nice. A 50 handle in UVXY. That'd be intriguing, listeners. We'll stay tuned for that. Hopefully we'll hear more information on when that's coming sometime soon. Let's keep on rolling to VXX. Not a heck of a lot going on out there as well. It's at about 1220 right now, up about 0.2 of a point on the week. Today, respectable numbers, 51,000 contracts on the tape. The ADV, 64,000. So slowly moving in the right direction. Again, it's up about 1,000 from this time last week. Again, we've said it before. I won't belabor the point. I know a lot of you have washed your hands of VXX, and for understandable reasons, but still has maybe some interest, some merit as an indicator out there. Let's just do a quick top 3 here in VXX. Number 3, we've got about 19,000 of the Jan 13 puts. Number 2, 35,000 of the Jan 17 calls. And number 1, 37,000 of the Jan 15 calls. So it's all Jan in the top here, all going away today. Intriguing to see what remains. The next biggest position after that are 4 and 5. Let's say we have a March 2025 vertical, about 17,000 open on each of those. So intriguing stuff out there in VXX. Again, not a lot to take from it there. It's still kind of an intriguing indicator. Mr. Meatball, anything catching your eye in the formerly broken, now maybe just intriguing as an indicator VXX?
Yeah, and I didn't really see a lot that was super interesting in VXX this week. I mostly just watch it to see what that 30-day future is doing. And that is it. I'm not really trading. I'm mostly in UVIX and SVIX because that's where I think there's money to be made.
Money to be made, indeed. Could be money to be made out there in earnings season as well, listeners, because we are in it yet again. Luckily for you folks, we have all the data coming hot off the presses from our friends over there at the ORATS machine, pulling the levers, dialing the knobs to get you all the great data. You know where to go. Check it out, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side of earnings. And man, we had some names popping off this week. Tuesday, Morgan Stanley, Goldman, United Airlines, and IB. Wednesday, we had Chucky Schwab, PNC, Alcoa, Discover, and Wintrust. Thursday, P&G, Northern Trust, and Netflix. Today, we had our buddies over there on OPR with Allies. So you had a broad spectrum of financials this week. You also had the Widowmaker and Netflix. You had some aluminum, some airlines, some brokers. You had quite the cross section of earnings out there this week. Luckily for you folks, you can check out the earnings move results report whenever you want if you are so inclined. You can look at P&G. This came out right after the announcement there yesterday morning, and we were looking at, so they went into their announcement 146.41. They're pricing in 2.7%. They delivered a 1.5% out there, so not a heck of a lot of post-earnings movement out there. Now, of course, frame of reference is everything with these, so if you held on to it until right now, P&G is trading at about a 142.20, so it has dropped about $4.20. So again, if you held on to it longer, you got a much bigger move at the end of the day. But we just measure kind of the initial earnings blush, what happens immediately post-announcement, so you can try to measure the actual earnings vol that is coming out of it as opposed to all the rest of the noise. Alcoa, same deal, 18th after the bell. They were 53.5 going into their announcement. They're pricing in nearly 7%. They delivered 3.3%, so also underperformance. But let's see if that's the case right now as well. And they're trading 51.5 now, so they're down about $2. So they have pretty much not moved at all since their announcement. So they're still about 3.5% out there. So a little bit of underperformance on Alcoa. Let's go to Netflix. They were yesterday after the bell. They were going into their announcement, 326.33. They were pricing in $31.20. It was interesting because in the past they had moved $34.5. So less vol in Netflix, always interesting out there. And Netflix hanging out $337 right now. So up about $337.70 is up about $11.40. So wow, dramatic underperformance. They're pricing in $31. So yeah, wow. Interesting stuff. Let's go to GE really quickly and see what's going on the earnings vol front there. GE, that's coming up next week. They are pricing in $79.25. That's where they were trading as of this report. They're pricing in $3.66. In the past, they've moved $3.33. So not a heck of a lot of extra juice on the docket for them. Good old Microsoft next week as well. Let's see what they're pricing in from an earnings vol perspective. 24th after the bell, about $2.36 is where they were trading when we ran this report. They're pricing in $11. In the past, they've moved $8.37. So Microsoft pricing in a fair amount of extra juice. And again, with so much regulatory uncertainty hanging over them right now with that big Activision deal, probably understandable why they'd be a little bit more juice priced in. Let's go all the way out to the number one single name you folks always like to sling. It is Tesla, popping off 25th after the bell. 128.75 was where stock was trading when we ran this report. They're pricing in, get this, listeners, 11.25. In the past, they've moved 6.75. So a heck of a lot of extra juice, I think is the technical term. And then again, you've seen Tesla move that much intraday easily. So intriguing stuff out there for Tesla fans. Too much juice, too little juice? I'd be curious. Hit us up. Let us know. Mr. Rhodes, I know you watched a little bit of earnings vol. Anything catching your eye out there this season, sir?
No, the only thing that it seems like there were some outliers the last quarter, and it's bleeding through to options being overpriced relative to some of the early earnings that we've seen so far. And like Netflix, I think they were pricing in about 10-11%, and right now it's up like 7%. I hadn't checked it in a little while, but I know it was up less than the average move. And when you look back, like 3 of the last 4 moves off earnings for Netflix have been incredible. So typically they, when you see a few outlier moves, the options tend to overprice the next one. And that's what we witnessed with Netflix.
That is certainly the case. Let's see now what we witness as we open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. No shortage of ways for you folks to hit us. Of course, at Options on most of the major social media platforms. Questions at theoptionsinsider.com works. If you're on the pro side, you can use the members hotline. Or if you're listening live, you get bumped up. Looks like a lot of the live folks are concerned about my health. I'm doing all right, listeners. Hopefully I sound all right. I am powering through. Only one more show to go after this. I think my voice can make it. Then I get to rest. So thanks for all your concern. It's like a lot of debate, too, about good wagering opportunities for the playoffs this week. We need to have some sort of sports wagering show here on the network. Well, I know a lot of you folks are into it. Maybe get DraftKings on board as a sponsor. That'd be kind of fun. Talk all sorts of fun things against the spread, using the futures. Could be interesting. Seems like a lot of you will be down for that. So intriguing stuff out there. Our question of the week right now, listeners: the zero DTE trend exploded in 2022. Is this just a fad, or is this the wave of the future? This kind of came about. We were talking about these products in our pro Q&A yesterday with Scott Nation, or 2 days ago now with Scott Nations, and also with Dan over there on Options Bootcamp. And for all the love they're getting, there are some folks, Scott included, who are a little bit leery. I think it's just a fad. It's kind of a near-term gambling fad, and it's going to pass. So I thought we'd put it up to you folks, the ultimate arbiter of all things here in the markets. Quite simply, is this zero DTE thing, is it just a fad, or is it here to stay? Mr. Meatball, we'll start with you. I know you're a big proponent. This zero DTE thing, does it have legs, or is it a fad, sir?
It's got legs. It's got legs. There's just such use case for them to hedge immediate near-term market risk that, people like it. I totally get it.
Mr. Rhodes, are you down with all things zero DTE? And you think our audience is too?
Oh, absolutely. Well, I'm certain the audience is. They wouldn't be listening to us if they didn't, love slinging options every single day. And it's a lot easier to sling options when you don't have to worry about the volatility or anything else. You just have to worry about where the underlying market closes today. And I think that probably has brought a lot of new option traders in that are thrilled they don't have to worry about the Greeks. Sorry to Dan Passarelli on that.
and I'm telling you that these zero DTA options are reducing VIX volatility.
Yeah, absolutely.
I think one of the big things that you're going to see is that the likelihood of a VIX spike, like we used to get, you'll still see these big swells. VIX can still get to 80. That's not what I'm saying. But the VIX to, from 19 to 28 in a day or two, and then back to 21 2 days later, that is likely a thing of the past. Because of these zero DTE options. 2023, we saw the VIX move the least on down moves that we've ever seen on record. And it was losing more on up moves than it was gaining on down moves, which is, I don't believe has ever happened since they listed VIX futures until last year. So there are some serious changes in just some VIX behavior and VIX futures behavior because of these options.
Well, I mean, why would you and this goes beyond the zero DTE options, but a longer term impact here is going to be if you tried to hedge your portfolio last year with VIX, didn't work. So
no, it did not.
And so the volatility risk premium guys, the ones that sell volatility and do fairly well with that, if you're not going to periodically have aggressive buyers and then have moderate buyers all the time, it's going to become much more difficult for them as well. And you have to start to worry about the overall complex.
They have this huge hit an SPX and then it kills the other baby. That would be certainly an intriguing unintended consequence out there. Speaking of unintended consequences, listeners, we have a lot of great listeners from all over the globe. Sometimes they point out some interesting unintended consequences that come along as a result of regulation, just like Contango King did. He actually sent this in end of last year. We've kind of just been busy on the show. It took us a while to get to it, but he wants to know, he said, hi, do you guys cover in any of your shows the coming change of taxation rules regarding PTPs? These are publicly traded partnerships, listeners. Most brokers simply blocked trading of these PTPs for non-American traders. This is also blocking all vol ETPs except VXX. Any chance you will discuss this in the podcast? He sent in a bunch of related material. He also mentioned SBKX and SBKY, also included on that effectively banned list. What happened here, listeners? The IRS put some new regulations into effect that went into effect at the beginning of this year. New withholding regulations on these PTPs exclusively for foreign investors. Now, we know we have a lot of listeners overseas. You mostly talk domestic stuff here, but we love all you international folks as well. And this certainly sucks for you. Looking at circulars here from Schwab and IB effectively saying, hey, we're just going to, put these on hold for you international folks right now because the withholding requirements are just so onerous. 37% for individuals, 10% on top of that for other just crazy. Luckily, looks like the IRS maybe came to their senses since he sent this into us. They have allowed these firms to, I guess, file some sort of notice, some sort of exemption, which allows, and looks like most of the, because all these ones we talk about on the show, listeners, they're all affected. UVXY, XVXY, SBKY, everything we talk about here, with pretty much the exception of VXX, is all on this list. So a lot of our international listeners were kind of just kicked to the curb at the beginning of the year. It seems like they've allowed some sort of exemption, some sort of notice to be filed now. It looks like that's giving them about 90 days to get their details in a line, get their ducks in a row behind the scenes in terms of how much withholding they're going to have. Then I think they have to file that notice again. You know how these tax things work here. Listen, I should give the caveat. Obviously, none of us here are CPAs or tax attorneys or tax professionals in any way, shape, or form. But this does suck. We hate to hear that a lot of our international listeners all of a sudden had the spigot turned off on some of their favorite vol products. It seems like, at least for now, maybe you have access to them again, but that's only going to be for, looks like, another 60 to 90 days before they have to kind of refile, or maybe you guys have to take a hit in terms of a huge amount of withholding here. I don't know, Mr. Rhodes, you probably deal with a lot of international listeners. Have you come across this issue with a lot of these products we have now being kind of off limits for international listeners? And what are your thoughts, sir?
Well, and you were talking about the refiling thing, and that's why I was making little noises in the background. And do not, find this in writing somewhere. Don't take my word for it. But I was speaking to somebody from one of these firms, and they said that you've got to just refile every 90 days and everything will be okay. But the brokers are worried about differentiating who's filed and who hasn't. And the brokers are worried that, this is just an example. It's not saying it's going to happen to VXX. But remember, VXX had the issues where they had not gotten the proper approval to keep the redemption process, the issuance and redemption process going. And that created a complete, a huge disconnect between the underlying pricing and what we were seeing in the market each day. So one of the risks is you have one of your funds that files, they do the right thing, it's available to you overseas, and then all of a sudden they drop the ball on the refiling. I doubt that would happen, but that could be a risk as well. If I were an international trader and I love short volatility, and even if this is just a possibility of a risk, I would just switch over to the options and the futures and try to replicate the same positions in something that I don't have to worry about. And it's if I were still at SIBO, I'd be jumping up and down and writing a paper on how to replicate the various performance of those ETPs and send that out to my London and my Hong Kong people.
Yeah, this sucks across.
That's what I would do.
This sucks across the board. We feel for all you folks out there. Russell is right. At the end of the day, the mothership options are still there. They're not impacted by this. The list of all the Franken products you may want to touch, this list is enormous. it's everything, not just vol products. It's everything you might want to trade out there is on this list. So yeah, you're going to be better off going straight to the source on these and doing the straight up futures. I get, or the options. I get a lot of you don't want to go down that road. You don't have time. Maybe you don't feel like you have the wherewithal. You like the fact that these products will do it for you. But if you're going to be on the hook every 90 days or whatever, up in the air about whether your product is going to be available to you or not, that's no way to trade going long term. Mark, you must have a lot of international clientele. Have any of them brought this to your attention, sir? You have any thoughts?
Nobody's really talked to me too much about this. Most of my traders are actually just trading VIX, or they're trading options on UVIX and UVXY. They're not trading physical. Does this affect the option trading as well, or just the physical?
Obviously, it's going to make things more challenging to access, right? And that alone is not a good thing. But yeah, specifically the options, that's a good question. That's another, again, talking about unintended consequences. Whenever there are tax changes, there are a legion of unintended consequences as a result. We're seeing a lot of things getting more challenging on the international front in terms of trade and logistics. A lot of it comes down to things you normally associate, like semiconductors and other things. But sometimes it sneaks into our neck of the woods too, listeners, in the forms of the products we all like to trade being taxed in some, shall we say, onerous fashion. So I'm sorry to all of our international listeners that this is impacting. I think the best advice is what Russell said. If you are worried about this, at least for now, back out of UVXY. You can replicate that. You can obviously get short VIX. You can get long VIX. You can do a lot of things just with the VIX options themselves. I get it. A little bit more onerous, a little bit more activity involved, but it's better than A, being subject to these ridiculous withholding requirements, or B, just having your product just kicked to the curb by your broker in the middle of your holding period. That would be terrible too. So yeah, this is not a way. You don't want to trade with this big sword of Damocles hanging over your head. So we'll keep an eye on this. Who sent this? Is Katango King. I love our listeners bringing these esoteric things to our attention. That's why we love you all. We got the best audience on the planet. But yeah, this one, unfortunately, doesn't seem like there's any real workaround right now. They're still kind of figuring it out. So I think for now, going straight to the source is the way to go. As we have to go into our final segment, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. And here we are, crystal ball. Last week on the show, it was myself, it was the Meatball, and it was Mr. VIXologist. And Mr. Meatball was playing his palindromic nonsense. He ended up getting the closest, 1991, right about 1965, coming into the end of the show here. I was playing the Goldilocks last week at 20 double, so no joy for me. Jim was even higher at 21.5. We kissed all those in the intervening time, but right now we're still ending in a 19 handles. Mr. Meatball, you are the closest without actual victory, so I'll allow you to choose. You want to go first, or you want to pick somebody else to go first?
That's pretty. 1965 versus 1991 in this market. That's pretty darn good.
Not bad.
It's
not our 10th of a point, but it's not bad.
Darn.
Yeah, closer than me. I'll give it to you.
Yeah, that's pretty darn good. I did 1991. I'm gonna say that you're gonna see vol move up a little bit, not a lot, as we head into some of those earnings. We do have a couple of big ones at the end of the week next week. Notably Microsoft on the 24th. And when is, and then we've got
Tesla coming
Microsoft
up too, 25th.
Next week. And who's on the 25th? Tesla on the 25th. That's a big one. Amazon's not till the Apple, Amazon, Meta are a little later in the week. Not that Meta's as important as it anymore. So you got a couple of big earnings, plus you've got some earnings. So I'm going to say 2002.
2002 for the Meatball. Get your guesses in now, listeners. Again, if you come close without going over 10th of a point, then you can win fabulous prizes. I was next closest, so I will go next. I will allow Russell time to mull here. 2002, I was at 20 double last week. I also am feeling a little bit more vol this week. I'm going to raise myself up a little bit. I'm going to say full point from where I am now. I don't hate that. Tell you what, I'll go up a point and a tenth. I'll go 21.65 for this time next week. All right, Mr. Rhodes, you got quite a market. You can come in between, or you can be a crazy outlier. Where are you feeling for next week?
I'm not going to be a crazy outlier, but so far, we're early into earnings season and the market seems to be taking it fairly well. And, if we come through next week kind of unscathed, I think volatility is going to be lower than where it is right now. So I'm going to go with, I'll say like 1850.
18.5 says Mr. There's our market listeners. 18.5 on the dark side. Mr. Meatball playing the Goldilocks role today, and me being the crazy vol optimist there at 21.65. All right, that's going to do it for Vol Views today. Looks like our chat got some great guesses coming in. Options Queen 2030. She's usually pretty good. 1980 for Nichols. Got some other ones scrolling in there. We'll go through all of them, add them to the notes over there. Look, you guys are down for the wagering show as well. Maybe we'll have to make that happen. That would be kind of fun. Maybe a fun heading into the weekend show. We do like hey, let's break down what the spreads are in big games. Maybe we can use futures. Try to find some way to apply some trading methodology to picking up the points on certain teams. It might be kind of fun. Seems like a lot of you are down for that. Unfortunately, listeners, that music means that's going to do it for the on-demand portion of the network this week. I want to thank all of you who joined us. Remember, if you want to keep the party alive, you want to join us for Options Oddities in a little bit, everything else we've got going, check out the great Pro Q&A I just did with the creator of VolQ, Mr. Scott Nations. TheOptionsInsider.com/pro is the place to go to learn more. And Mr. Meatball, where should folks go if they want to learn more about all things Pitzer?
Yeah, go to optionpit.com, and I'm writing stuff on VIX and volatility just about every day. You will want to be there.
All right, we got more 2110. That looks kind of close to me, but not bad. I'll take it over there in our chat. Mr. RHOADS, if folks want to check out your multi-part odyssey on your VIX trade over the next 6 months or anything else, where should they go? What should they do?
Well, I keep putting that on a Substack, and I tweeted the link to that out. And I'll be rolling in a couple of Fridays as well. I'm getting ready to shut down my computer and head to the airport and go to Europe to find out what people think about the VXX ETP thing. Actually, I'm going over there for EQ Derivatives European Conference. We're in the process of parting ways, but I'm still going to a couple more of their conferences before we complete that process.
Where in Europe are you going?
Barcelona.
Barcelona, the mecca for all things vol out there, and some tapas as well. So intriguing stuff. Have fun there. Maybe give us an update or report on what the institutional vol crowd is thinking. Listen, again, that's going to do it for us here on the network this week. Thanks to all of you who joined us. Pro Folks Hangout. Pump some fun stuff in. To be back in a little bit with Options Oddities, provided my voice holds up. Then back again on Monday. No truncated holiday week this week, all the way through to another Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.